Good morning. Welcome to Market Day Report. Well, it's midweek. Let's jump into the markets, and we'll start with corn and the overnight trade two higher, 422 and 3/4 on the December, and the deferreds higher as well. What about soybeans? Two higher on the November, 1018 and 1/4, and higher for the deferreds. We'll hit the wheat and December contracts for Chicago, 602 and 1/4, 7.5 higher, reversing that somewhat nasty lower trend from the Tuesday session. December hard red, 610.5, down 6 3/4, and spring wheat, 5 3/4 lower on the December at 650 and 3/4. And finally, the cotton market 40 points higher in the overnight, 72.67. Brian Hoops, President, Midwest Market Solutions. Okay, Brian, what are you watching here midweek?
Well, good morning, Tony. So, private export sale announcement this morning, we should pass along 126,000 metric tons of corn sold to an unknown destination. And, in case of soybeans, that unknown destination probably equals China. It could in this case, or it could end up being Mexico, as they've been an active buyer. But right now it's just unknown. But it will be a little supportive to the corn market. Probably the biggest thing that we really want to continue to watch outside of the WASDE report coming out on Friday morning is weather here in the U.S. and in South America. Here in the U.S., we're seeing very dry conditions across the southern plains. The ground to try and plant winter wheat in is hard. There's not much soil moisture there. Even if you get the crop in the ground, it's not going to emerge or germinate because there's not enough moisture to do that. So that's a concern, and the forecasts do not hold much hope for rain over the next 2 weeks for a lot of the winter wheat plains areas. That bears watching, as this wheat market should be the upside leader, but also South American weather. Now, we've traded some of the forecasts that have gone much wetter and more of a monsoonal growing pattern for South America, particularly for Brazil, start of their rainy season. And the European weather model continues to push that narrative into at least 11 to 15 day time frame. But the U.S. weather model doesn't agree. It's turning a little bit drier for South Brazil and for Argentina. So that's in the longer term forecast, 6 to 10 days out. It's hard to get an accurate read. But it looks like in the near term, some rains have fallen. That's pushed soybean market lower. But if these rains are a bust that the European model is talking about, we're likely to see another push higher because of the drought-like conditions that will return for South America. So that's really what I think you really have to watch is those weather forecasts, and then of course the WASDE on Friday morning.
Okay, Brian, let's take a break. We'll come back and we'll talk livestock futures. Market Day Report continues in a moment. Good morning. It's Market Day Report. Now, speaking of reports, we get a report on Friday from USDA, a World Ag Supply Demand Estimates report. And normally we're focused on the row crop side of that, but it's important to remember that we also end up getting numbers for livestock. And it's a good segue into how the cattle market finished the session yesterday. Let's look at live cattle. A buck higher on the October at 188.47, 85 higher on the D's at 187.87. Deferreds again all higher. And what about feeders? Buck 47 higher on the front month at 250.32, $1.15 higher on November at 250.30, and strength rolling all the way out through that April contract. And speaking of strength, did we find it in the hogs? Sure did. October, 15 higher, 84.12, 77.17 on the December. That was 35 higher. But again, pretty impressive when you roll out to that May contract, out into the summer contracts as well. 88.72, up 42. Let's bring back in Brian Hoops, Midwest Market Solutions. And let's start on the hog side of this real quick. Again, every time I bring this up, I'm somewhat surprised that hogs continue to move higher. Are you?
Well, you look at the lean hog index, measure of the cash markets, it's up around 86, $87, I believe, and the futures are still discount to that. So we need to move the futures higher because they have to settle against that index, I believe, on October 14th when the last trading day is for the October futures. So that's one reason for the market to move higher. You look at December, a huge discount to that index. It doesn't have to align right away, but a $10 spread, $12 spread, that's probably too much of a spread, and we should see that improve and narrow up. Hog weights were released this morning. They're released every Wednesday morning. They are a little bit firmer, a little bit heavier than a week ago, and they're almost 3 pounds heavier than last year. So we've had a problem all year in both the pork and the beef industry where weights of these animals that we're killing are much heavier than the previous year, and that has increased the supply and meant we don't need as many animals to kill because we have heavier animals and as much pork or as much beef compared to a year ago levels or even more, just because of the heavier weights. So that is a little bit of a negative for this hog market. It's a negative for the cattle market, but we're seeing big advances in cattle futures this week. We look at October, which is now in deliveries. It's $2.50 premium to last week's cash trade in the Southern Plains, implying that the cash markets, or at least the October futures, thinks cash is going to come quite a bit higher this week. Right now, we're steady to $1 higher called because the cutout values have improved. Packer margins have improved a little bit as they have cut their kills, but yet that's a pretty steep discount, or it's a pretty steep premium, I should say, over the cash markets. So cash is expected to move higher. We haven't seen any deliveries yet, but that may be coming if we don't see a movement in the cash markets.
Yeah, absolutely. At some point, you've got to converge both the cash and the futures there. Brian, always great to see you. Brian Hoops with Midwest Market Solutions.